The VA loan is one of the best financial instruments known to man, and only 12% of active military members actually utilize this, which is crazy to me. But we are here so that you can be in that 12%. And not only will you be in that 12%, but you're going to do it with intention. Okay. The intention is going to be to build wealth and set yourself up for the day that you hang up your uniform and hang up your boots. So let's dive into the plan. My name is Stephen Harris. I am a real estate broker and a mortgage broker in beautiful Killeen, Fort Cavazos, Texas. And yes, we are a veteran-owned company. I do close to 50 VA loans a year, and it has been beautiful to watch the progression of wealth amongst these military members who come through our doors. And my business partner, he did 24 years in the military, and he tells me this all the time. One of his biggest regrets was not buying a property at every single duty station that he touched, especially back when he was in the military. Like, you could really buy a property at every single duty station, and they were all probably really affordable. So that's a little bit harder for us nowadays. So we're going to make sure that we are moving with intention, we're moving smart, and we're setting ourselves up for the day that it's time to retire. All right. So first, let's get into the basics. Okay. I'm sure you already know this, but if you don't, the VA loan, here's just the basics. It is a zero money down loan, but zero money down don't mean free. Okay. It's not free. A lot of times you'll have a funding fee unless you have like a disability percentage or Purple Heart. So you'll have a funding fee. Typically they tack that on to the top of the loan. So it might take your loan price up just a little bit, and you'll have closing costs. Closing costs are typically going to be taxes, insurance. You got to prepay those, especially in Texas, and then other fees that come with transferring the property, escrow fees, things of that nature. So it is not free. There's money due. Okay. You got to pay for your appraisal, got to probably pay for your credit report. Like, there is money that needs to be spent. In some markets like mine here in Fort Cavazos area, you can get the seller to pay your closing costs. And it really depends on the market and like how the real estate market as a whole is moving. A couple years ago, that wasn't happening. You couldn't get your closing costs paid. But right now, with this high interest rate environment, you can get your closing costs paid. And so that's great. So as little money as you have to bring at the closing table is going to be great, because you're looking at getting into a long-term investment with very, very low overhead. That's our thought process. Okay. So those are the basics. The next step is we're going to wrap our minds around the most basic of basics of real estate strategies when it comes to actually building wealth. And it is the long-term play. Very, very simple equation. You buy it, you hold it for as long as you possibly can, and then you sell it. Okay. But that middle part is the part that gets us sometimes. So the only reason that you're not going to hold this property as long as possible is if you have massive changes in your lifestyle, like divorce, or there is something that happened in that property that there's a stigma in your life and you just need to get rid of it. But if you can help it, you will hold this property for as long as possible. Why? Two major reasons. The property value itself will appreciate over time. In most cases, real estate goes up and down, right? But the overall trend is upwards. And I don't see that changing anytime in the future. The old saying is, you buy some land, they ain't making no more of it. It's kind of the same principle here. The value will likely appreciate over time. And even if you do hit a period of time where the value depreciates, if you hold it long enough, you will get that value back and then some. Okay. The second part of this is you will likely have to rent it out to somebody after you leave that duty station. That rent is going into the equity of the house, right? And that equity kind of works as a savings account. It's like a forced savings account. And at that point, your property actually becomes an asset and not a liability. So having somebody else essentially pay down the mortgage owed on this asset for you. So you're using other people's money to get rich. Now, here's the two types of properties that I want you to look at, especially on your first go out. Now, here in Fort Cavazos, one of the most popular things that soldiers do is they will buy a duplex or a fourplex. You can buy up to 4 doors. Beyond that, that's a commercial transaction. And if you get a duplex or fourplex, you can do triplexes, but like those don't really exist. So duplex or fourplex, you have to live in one. And you're going to need to live in it for about a year. There's not a hard, fast rule as to how long you need to live there, but you need to live in it because the VA doesn't want you to be an investor, right? But they can't stop you from being an investor. So live in it for a little while, and then you can either move on to a new duty station and put somebody in there, or you upgrade to a single family property and move somebody in there, right? So there's different ways, but the best thing to do if we're talking long-term strategy is to move into a multifamily, because then you have a subsidized mortgage payment, right? Whoever's on the other side is helping you essentially pay that mortgage. And then when you move out, you will likely cash flow because it should come to a place where the amount that those 2 units are paying is more than your mortgage altogether. Now, we're in a high interest rate environment, and that might not be the case. I'm going to touch on that later, but still, multifamily is the way to go because the appreciation over time is also greater than on most single family homes. But multifamilies are expensive now. So if you're in a place where you can buy a multifamily for like $350 and under, just do it. Just do it. All right. But if you can't, I get it. Let's look at single family. The strategy when it comes to single family is to buy a starter home. All right. You don't buy the house that you would buy towards the end part of your career at the beginning. You buy the starter home, something that's 1,500 square feet or less. It's likely going to be 30 to 40 years old, but it's in good shape, and you want to get it in a solid neighborhood, somewhere that you know somebody would actually want to live whenever you and your family vacate that place. But starter home has to be the key. I think the overall mindset for these properties, one is it's a long-term play. I'm going in this thinking about myself 15, 20 years from now. 2 is right now I'm going to live beneath my means so that my future self can live a life that I always wanted. And it's not glamorous. It can be ugly. You could live in a neighborhood with like really annoying children across the street that always come and do stupid stuff to your house. The people next to you in the duplex might be loud, but the thought is like you are preparing yourself for the future. And if you do the things that most people will not do now, you get to live the life that most people will not live in the future. So that is the key mindset. So if you're going to buy top 2 properties, multifamily, duplex or fourplex, either one is fine. You have to do the numbers on those to make sure it makes sense. And also link up with your mortgage officer to make sure that like they're leading you down the right path numbers wise, or single family. And we're going to go more for starter home than we are for the big home in the nicest neighborhood. All right. Those are 2 things you got to pay attention to. Then we are essentially trying to get you to buy a property at every base where it makes sense. So you're going to buy it. You're going to leave whenever it's time to leave, and you're going to rent that place out. Well, what if the amount of rent that you can get for it doesn't cover the mortgage? I see that happening a lot right now. I think the mindset has to be that whatever that difference is, which it's probably only like a couple $100, it's typically not anything massive. If it is a massive gap, then there may be another way to plan this, and maybe we made a mistake up front, but it should only be a small amount. And you have to take that and have that in your mind. It's like, this is me investing into my retirement. This is also my retirement fund. So if it's a couple $100 and it's something that your family can afford, then you take that and you pay that difference. Here's the good thing. Typically rents are going to go up. And so that's probably not going to be forever. And if we are in a position where our mortgage is higher than our rent, then we probably bought in this current environment where we have higher interest rates. As soon as those go down, you can refinance more than likely. If you've owned it for several years, then you're likely to be in a good position to refinance. And so you can get a lower payment, lower interest rate. All right. And then you'll get the other one. And you can have more than one VA loan at the same time. What you have is a set number of your entitlement. So let's say it varies by place, right? But let's say it's 700,000. So all the properties within that VA loan entitlement have to be in that 700,000 value wise. Okay. If you find yourself in a position to where you've used up all of that entitlement and you're maybe going on to your third or fourth property, then it's probably time to refinance one or two of the other ones out of VA into conventional, and the hope is that you've held them long enough to where the cash implication is not too high on you. But maybe you refinance one of the older ones so that you can free up more of your entitlement so that you can do it again on the next one. That is all situational, but that has to be the thought process. I think the big takeaway that I want you to get from this is you can use your VA entitlement more than once. And once you've maxed it out, there is a way for you to get it back again. But it all needs to make sense. And hopefully you've accumulated enough cash that like your future self can just put 20% down on the next one and it's not a big deal. So all my veterans that are watching that have done this, drop a comment below. Let people know that like this is real and you can really put yourself in a great position. I've seen it time and time again. I know way too many people who have taken advantage of those VA benefits and made themselves investors. And I've also seen some accidental investors who ended up buying a house, having to leave, but they couldn't afford to sell it. So they rented it and then they saw how that rental income accumulated and also the mortgage went down over the years. And they realized like this is something that I can really do to build wealth over time. So if you've done this before, leave it in the comments. If you're thinking about doing it in the future and you have questions, just reach out to myself or anybody that you trust around you who has done it. Reach out. Ask the questions. I'm in beautiful Fort Cavazos, Texas. I am licensed to do VA loans in the entire state of Texas. So if you're coming here, no matter where you're going and you're thinking about using those entitlements, let me know. Let's hop on the line and have a conversation. All of my contact info is in the description below. I think the major things from this video is when you're using, one, use those VA benefits. Use it, okay? Especially if you're in an affordable area. Two, you had to have a long-term mindset. We're going to buy it. We're going to hold it as long as possible. And then we sell it. And then you only sell it if you've got a lot of equity built up. Okay. Every investor has to know when it's time to cash out. Okay. And then the third key thing is we're going to live beneath our means. So that means we're going to go and buy the duplex or the fourplex that is not as lavish as the beautiful house in the most beautiful neighborhood, or we're going to buy the starter home, okay, so that we can keep overhead low and keep ourselves in a position to where we can rent it out and make that residual income over time. And the thought process needs to be that we're investing into the future. We're doing the hard thing now so that we can have an easy life in the future. Again, VA benefit is one of the best financial tools in the world. And if you have the ability to use it, let's use it, but let's use it with intention. All right. Got a couple other videos about VA loans here. So go check those out and I'll see you over there. All right. Peace.